Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing regarding Nifty, Bank Nifty, the key levels to watch out for the indices, as well as the main sectors in focus in trade today. First up, coming to the update in the global markets in trade. In trade yesterday, all the three US indices traded in a narrow range before ending the session on a mixed note. However, the overall trend still remains positive with the Nasdaq and the S&P 500 managing to close at record highs. Going forward, the zone of 5,540 5,520 will act as the immediate support for S&P 500. As long as it's trading above 5,520, it is likely to test the levels of 5,650 in the short term. If we see, Brent oil has marked a high of 87.69 in trade on Friday, and thereafter it has witnessed selling pressure. On Monday, it has slipped below its crucial short-term moving average, that is the 8 and 13-day EMA levels. Going ahead, the zone of 83.70 will act as the immediate support for Brent oil. Coming to the US dollar index, so we have DXY, which has taken support near its 100-day EMA level and thereafter witnessed a minor pullback. However, it is still trading below its 20 and 50-day EMA level. Any sustainable move below the levels of 104.7 will lead to further selling pressure in DXY. In that case, it is likely to test its 200-day EMA level, which is currently placed at 104.49. Now coming to the update regarding Nifty. On the first trading session of the week, the benchmark index Nifty has traded in a narrow range of 104 points. It has formed a small body candle with lower shadow. Going ahead, the zone of 24,260 24,240 will act as the immediate support for the index. As long as the index is trading about 24,240, it is likely to test the levels of 24,380 followed by 24,500 in the short term. While on the downside, if the index slips below the levels of 24,240, the next support is placed in the zone of 24,160 24,140 levels. On the derivative front, the July futures has ended on a flat note, and the cumulative open interest of the current, next and far series has surged by 0.32%. Among the constituents of the Nifty index, 12 stocks have witnessed long built up, 10 stocks have witnessed short covering rally, while 15 stocks have witnessed short built up and 13 stocks have witnessed long unwinding. Coming to the option chain, if we see 24,400 strike has significant call open interest followed by 24,500 strike, and on the put side we have 24,300 which has significant open interest followed by 24,200 strike. On the weekly expiry front, if we see the put call ratio is at 0.98, that is the weekly expiry, while for the monthly expiry we have the PCR which is at 1.46. Now coming to the update on Bank Nifty. Since the last 9 trading sessions, if we see the benchmark index Bank Nifty has been trading in a narrow range, that is 53,357 on the upside and 51,996 on the downside. However, the major trend of the index is bullish as it is trading above its short and long term moving averages. Going ahead, the zone of 52,250 52,200 will act as the immediate support for the index. Any sustainable move below the levels of 52,200 will lead to profit booking in the index. In that case, the next support is placed at 51,900 level. On the upside, if we see the zone of 52,700 will act as the immediate hurdle for the index. Any sustainable move above the levels of 52,700 will lead to a sharp upside rally towards the mark of 53,100 followed by 53,500. On the derivative front, if we see the July futures has ended with a loss of 0.31% yesterday, and the cumulative open interest of the current, next and far series has dipped by about 0.44%. Looking at the option chain, 52,500 strike has significant call open interest followed by 53,000 strike, and on the put side we have 52,400 which has significant OI followed by 52,000 strike. For the weekly expiry, if we see the put call ratio is at 0.64, that is there is more call writing in the system compared to put writing at the current juncture, and the max pain is seen at 52,500 strike. while for the July monthly series we have the PCR which is at 1.19. Coming to the key market indicators, so in trade yesterday the volatility index has surged by over 7%. Going ahead, the zone of 13.814 will act as the immediate hurdle. Any sustainable move above the levels of 14 will lead to an extension of the pullback rally up to the levels of 14.8 in the short term. Overall, the advance decline ratio is tilted in favor of the declining counters. Now coming to the key sectors in focus, a strong move was witnessed in Nifty FMCG in trade yesterday, which has given a consolidation breakout on the daily scale. We expect this positive momentum to continue going forward, and the index is likely to test the levels of 59,000 followed by 59,500 in the short term. Among the constituents of the Nifty PSE and Nifty CPSE has witnessed strong buying interest along with robust volumes, which possibly can be a pre-budget move. While the current momentum is positive and the trend could continue on the upside, one should use trailing stop loss mechanism as a lot of these stocks are approaching the overbought zone. After the horizontal trendline breakout, the Nifty oil and gas has witnessed bullish momentum along with robust volumes for the second consecutive trading session. We believe it is likely to test the levels of 12,800 followed by 13,100 in the short term. Coming to the FI DI data, so both FIs and DIs were net buyers in trade yesterday to the tune of 60 crores and 2,866 crores respectively. If we see FI long short ratio for index futures is at 83.63 on a net basis, this as they sold about 7,323 index futures. On the stock futures front, if we see FIs have sold to the tune of 46,364 contracts, while on the options front, FIs sold 13,204 call contracts and sold about 1,28,071 put option contracts. That's it from my end. Thank you for regularly listening to our podcast. Wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.